My general rule of thumb is whenever I feel really, really good and think I'm really, really smart, I sell stock and I buy real estate. I said, what do you think $1 million in the hands of a mining stock promoter is worth? It is worth zero. Yeah, I think PEA they should almost change the designation to FEA, Fantasy Economic Assessment. Like this one PEA I've seen, my God, it is completely and totally ridiculous. And although I really do have a very difficult time yelling at Australian management just due to the time change, it's really tough to get them on the phone, and you definitely can't go over and punch them in the head as easy as you can a Canadian guy who's in Toronto just down the road, right? Here at Beaver Creek, I quite like Beaver Creek, and you catch the buzz of all the latest guys doing some of the latest work.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com. This is Mining Stock Education. I'm your host, Bill Powers, and I'm sitting outside with the waterfall in the background and the wind blowing with the mining book guy and Warren Irwin, top performing fund manager, president and chief investment officer of Rosseau Asset Management. If you're new to mining stock investing, make sure you go back to March 2018 to listen to my first interview with Warren regarding discerning mining stock scams, as Warren has a lot of experience and first-hand testimony with that regarding the Bre-X scam, one of the most famous scams in recent mining sector history. With that being said, gentlemen, welcome to the show. Nick, I'm going to pass it over to you. What questions do you have for Warren to kick off the podcast?
Yeah, so Warren, I noticed you had an interesting tweet on Cantex. Neat picture. Seemed pretty excited about it, and I was wondering if you wanted to add, some color to that. What makes Cantex special? It seems maybe it's like the size potential.
Yeah, well, the first thing is when you take a look at Cantex, you have to look at who's behind it. And the guy behind it is Chuck Fipke, who owns a significant portion, just under half of the company. He was the guy responsible for the Ekati discovery, all the pipes at the Ekati mine, and hence really the founding of the Canadian diamond industry, which basically built a lot of the infrastructure in the Northwest Territories and gave Yellowknife a real new pulse. So he's a pretty significant player. He made millions and millions of dollars for investors back in the Diamite days when he made that discovery. I was really new to the business when he did that, but I do remember it. So I've watched Chuck ever since then, and he's a very, very serious player. I have backed Chuck in the past. I've lost money backing him in the past. So for me to revisit Chuck after having lost a few $1 million backing some exploration earlier, but between the time of his Ekati discovery and today, it says a lot. Now, what I like about Cantex is I love the scale of it. We're basically talking about multi-kilometer long Gaussian with metal showing on surface, and when they start drilling below it, up near surface, it's up near surface, it's oxidized a little bit, but as you get deeper, it starts getting into 20% combined zinc lead, and there's quite a bit of silver there too, and you're getting metal value of around $500 a ton, which you take a look at gold terms, that's like a third of an ounce gold, and seem to be getting it around on about a 10 meter wide section. So what's interesting about it is when you have these multi-kilometer long things and you start multi-kilometer long structures 10 meters wide with $500 rock, if this thing holds together with drilling, you work out the math and it's extraordinary, especially use the people on the podcast. If you want, just work out with a 3.8 specific gravity, you can work out how many tons you have, and if you multiply the number of tons by $500 rock, you have a lot of really, really expensive ore down there, and that's what makes it so exciting, is that this could be a massive, massive discovery. So I'm watching it very, very closely. I bought some shares for my fund at $1 with I got a $1.50 warrant, half warrant, and today the stock's in the $4 to $5 range. But this could go way, way higher if it turns out to be continuous, and so we'll see. But it definitely has all the hallmarks that I like to look for: continuity, grade, really good pedigree of the people involved. It's in a good jurisdiction. It's in the Yukon. So there's a number of things I really like about it. So that's why I'm watching it very, very closely.
And, maybe as a follow-on question, different company, kind of an update on SolGold and Cornerstone, which you've talked about in previous interviews. Where do you stand there now?
Yeah, well, the SolGold's discovery, which was they basically farmed into the situation that it was from a project generator called Cornerstone, and then they went on to grow the initial very preliminary discovery into a 4 billion ton ore body, which is just extraordinary. It's definitely considered today to be one of probably the top 5 undeveloped copper deposits in the world. And as proof of that, we've had SolGold has had both BHP and Newcrest step up and make investments in it. BHP being the largest mining company in the world. Also, the CEO of BHP has said in a press release that they're very optimistic on their investment in SolGold. And at the time, my recollection, it was around $30+ million investment. So can you imagine the CEO of the largest mining company in the world commenting on a tiny little $35 million investment in a press release? And so it gives you a sense as to how important this discovery seems to be in the world. It's a shame right now that copper's a little on the weak side, but it is truly an extraordinary discovery, and the guys at SolGold and Cornerstone, but mostly SolGold, deserve a tremendous amount of credit for taking something initially that showed some promise and really growing it to a world-class deposit.
You have a very public position in NexGen. What are your thoughts on NexGen right now?
Yeah, NexGen's in a very interesting time right now. I bought in the NexGen prior to their big discovery around 60 cents. The stock went to, I think the higher was around 450 with the discovery. The stock drooped down to as low as around $1.50 not that long ago. So when you think about it, I bought in at 60 before the discovery really hit. And then it went to $1.60 here recently, after all that drilling and all that discovery and all the studies. So it really shows what's happening here in the case of NexGen. And during that period of time too, the price of uranium really hadn't fluctuated. It's about $25 at both times. So NexGen seems to be entering into a really unique phase. And an example I could give you of that phase was, I remember Aber Diamonds. It had a big run when the big discovery happened. It was just south of Ekati, and it ran up. I forget how high it went, but it went quite high. And then as it started to move into development, and when people started doing the resource work, the environmental work, everybody got bored. They blew the stock out. The stock, I remember this is 20 years ago. It was hovering around the $7, $8, $9 level. And I watched really smart guys in the market just hoovering up stock. And I was, again, it was 20 some years ago, so I'd only been in the business a little over 10 years. And I thought it was interesting how they were the smart guys were buying and the dumb guys were selling, or the impatient guys were selling. And sure enough, by the time Aber got into production and started cranking out some cash flow, the stock was $42. So these guys were stepping up, buying stock $7, $8, $9, and a year or so later, $42. In the case of NexGen, I can see the exact same thing happening, where the impatient money is moving on to whether it be marijuana stocks or Bitcoin or jumping on the recent gold bandwagon. And the smart long-term money, and again, there's not a lot of long-term money out there, but the guys are just hoovering up stock here at $1.60, $1.70, $1.80, and in 5, 6, 7 years, or whenever in the future, when this thing starts getting closer to some of their big cash flow numbers, it's going to be trading many, many multiples of where it is. But in the mining sector, what's interesting about NexGen is it's not unlike Aber, is that the downside risk from here is very, very little. Yet the upside over multi-years, if you have a multi-year horizon, is pretty extraordinary. It's one of the biggest and richest uranium discoveries in the world, in one of the best mining jurisdictions in the world, top quality management team, lots of government support, community support. Like, they have got nailed, they checked a lot of the boxes. This is going to be an extraordinary situation, but it's interesting how short-term outlook on some of the players has really created a value opportunity here for the people with a nice long-term horizon.
So if NexGen's valuation is so suppressed, when investors look at the uranium explorers, should we expect an explorer with some good results to even get any love from the market?
You know, maybe, but you're exactly, a very, very good question. Sometimes when I see, like for example, right now, SolGold is super duper cheap, and so is Cornerstone. And they've just made one of the world's best discoveries also. Like, NexGen is definitely one of the world's best uranium discovery. SolGold is one of the world's best copper discoveries. And they're all getting killed. And so it's a very interesting question. Why would somebody go invest in a new copper discovery or a new uranium discovery when we're seeing, when you do find them, you don't get paid for them? Now, the only thing I could think of is somebody who's, if you are investing in, let's say, an ISO or a copper explorer or any other explorer, it shows you have to be reasonably nimble if you're going to get in it. You may want to just get out of it when the hype is at the max and then try and revisit it at a later date. But there are risks to that too, because what happens sometimes is with these world-class discoveries, out of the blue, you'll get a big takeover bid from one of the major mining companies. So you never know. It's a bit of a risky strategy, but would I invest in copper or uranium juniors right now when I could see SolGold and Cornerstone and NexGen trading as cheaply as they are? You know, you kind of think it may not be worth it on a risk-reward basis given how cheap their trading is.
Kind of going on a global theme, how much does exchange listing matter to you, whether it's Canadian, Australia, or the UK, kind of as the three big ones?
Yeah, I don't really care what exchange they're listed on, although I really do have a very difficult time yelling at Australian management just due to the time change. It's really tough to get them on the phone, and you definitely can't go over and punch them in the head as easy as you can a Canadian guy who's in Toronto just down the road, right? So I try not to invest in Australia, or even the UK is quite a bit closer and for 5 hours. But generally, the UK mining companies, I find that they're active in Africa, in Canada. They're active generally in North America and South America. Those are gross generalizations, but it's not necessarily the exchange. I just like being close to management and being able to ask them questions, pick up the phone, talk to them, go on site visits. To go on a site visit to Australia takes, you've blown at least a week and tens of thousands of dollars. So I'd much rather jump on a short flight to somewhere in the Americas, or in some ways even Africa is reasonably easy too.
With emerging jurisdictions, in a previous interview with Bill, you had some interesting comments, and I'm just wondering, maybe in the last year, can you give at least one example of maybe a jurisdiction that's on more of a positive path, at least one that's on more of a negative path, and if they've affected maybe any of your investments or what you're looking at?
Yeah, well, Argentina is a good example of a negative one. Just, I may have touched on Argentina before. They've done some really bad things to mining companies I've had investments in. For instance, when we found an open pit mine in one area, one state of Argentina, what do you know? The governor puts an open pit mining ban on it. When we find a gold mine in another state, and it's an open pit, we're going to use cyanide to heap leach it. Then there was a cyanide ban in that state. That's Argentina. Then Argentina, it gets religion. It realizes that maybe it should have some industry to employ its people and feed its people. And then they get the religion, and now they've got currency control. So, my life's too short. I haven't got much time on the planet left. So I'd just rather just not deal with Argentina. That's, so that's one example. One on the upswing. Yeah, well, if you're doing South American companies, they're on the upswing. Ecuador is on the upswing. But, deep down, it's South America. They're on the upswing until they're on the downswing. So, Ecuador is the flavor of the day today. Ecuador has tremendous geology. It could be a tremendous mining success, just like Chile, and Chile and Peru. They're neighbors to the south. But we'll see how they handle it, because they don't have a long, rich mining history like Peru and Chile does, and I hope they embrace it, because there's a tremendous amount of benefit for the country and for the people by embracing mining. And any company operating there will be operating to the highest standards of environmental regulations, and the mining companies have come a long way with how they treat the environment, the people, the local community. With respect to, I've been down to see SolGold's operations. They've done a great job with community supporting the community, hiring local people, getting the community engaged and understanding what's going on. So the people making many of these decisions are indeed local people who have to live in the community. So there's not going to be any big dumping of toxic water into the stream that everybody, that may have happened, decades ago in mining, but with the local people involved in the mining process, everybody's in it together, and everybody wants what's right for the country, the people, local people, and the environment.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion, with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com. Eastern Europe? Do you have an eye on Eastern Europe? I know I met with some Eastern Europe companies here over the last 2 days.
Yeah, sadly, I was just in an Eastern European country for a week, riding my off-road motorcycle, and spending a fair amount of time with the locals and talking about corruption. And the problem is the level of corruption in Eastern Europe is very, very high. And unless you have the time and energy to deal with corruption and making sure that your partners are not corrupt, make sure that you're not going to get impacted by corrupt government officials, they're going to take your project that you've just spent $20 million moving forward and giving it to their friends, or adding levies or taxes or just outright confiscation. Remember, a lot of these countries in Eastern Europe were former communists, so they have a different mindset when it comes to what the people own and what private enterprise could own. You look at, let's say, Romania with Rosseau Montana. You've just got the NGOs in there and everything else, and I know people who worked on that project, and they're good, decent people, and they tell me, Warren, it says, we would go in there, we would clean up as part of building this mine, we'd clean up tons of environmental mess from years prior that previous miners have done, or continuing to pollute all the rivers. And the country will be better off environmentally by us going in there and mining these ounces and creating these jobs. So, so you see that, and you realize that, it's really tricky. And, I was also riding my motorcycle across Romania. It was the country I was in. You just see what's going on environmentally, and how in my instance, I was riding off-road motorcycles cross country, so I saw the environmental degradation of the timber industry. And I happened to be riding with one of the people I was riding with was a Canadian logger who knew all the environmental standards that Canadian loggers have to deal with in British Columbia. And he was pointing out environmental infractions for 4 straight days, and just look at how brown this river is. Well, it's because they logged too close to the river's edge, or they did this, or we wouldn't be allowed to do this, or we wouldn't be allowed to create tracks up old riverbeds where they were actually using riverbeds as roadways. And all those things we're not allowed to do in Canada, but they do it in Romania. So it's sad to see that, and it's sad to see some of this environmental mess in Romania won't get cleaned up because they can't build Rosseau Montana there because of NGOs and a whole bunch of other issues that are blocking the development of that mine.
I think you had some questions about how Warren plays the different cycles.
Yeah, or thinking about cash position. I think that's a problem a lot of retail investors have, either too invested or not invested enough at different parts of the mining cycle. And you're just wondering how much thought you might put into it, whether you have more cash or less cash, a few years from now as the market builds up, especially knowing that discovery could happen at any time.
Oh yeah, so why don't I just give you my own personal advice, and this is for advice for retail investors, right? Okay, so I've been trading for my own retail account for quite a number of years, right? For decades, right? So my general rule of thumb is whenever I feel really, really good and think I'm really, really smart, I sell stock and I buy real estate. I remember that's when I bought my Bre-X house. When Bre-X was, I was building my Bre-X house. That's where I sold half my Bre-X stock at $280 a share. The last cycle, I built my last house at the end of the last cycle after I made a big win on, I believe it was Gold Eagle, made a big win, and instead of reinvesting it in the market, I took it out and set it aside. I said, this is when I'm going to build my house. Well, sure enough, had I not done that, I would have lost 80 to 90% of my money invested in juniors as it came off for like 5 or 6 straight years down. So if the general rule of thumb, if I could give somebody something to think about, in my experience, whenever you feel good, you feel you're smart, you feel you know what you're doing, sell your stocks, or at least a good chunk of them, and put them into something very safe, either bank stocks, real estate. And whenever you feel that you're the dumbest idiot in the world and you can't believe you put all this stupid money into mining stocks, as in today is a good example. Like for instance, if my parents, my dad's 85, he comes to me and says, I've got some money to invest. I'd have no qualms putting him into some NexGen, some SolGold, and some other mining names like that. Like, Cantex might be a little speculative at this time for him, but some of these high value names, like there's a number of copper producers that are trading quite inexpensively too, right? So when you feel dopey, now that's a time to invest. And when you feel really smart, that's a time to take something off the table. And that's worked well for me, and it saved my butt quite a number of times. So for retail guys, think about that, because that's...
And you said in a previous interview with me that you've educated the investors in your fund when they had big wins to take that money off the table to prepare for the bear market.
No, I said when I told my investors in my quarterly letter, I said a number of times, I said, whenever you think I'm really, really smart, that's when you take money off the table. And whenever you think I'm really, really stupid, that's when you give me money. So they've been really good to take money off the table, but they never give me money when they think I'm stupid. But sometimes they take away money when I'm stupid, because it's tough. It's a tough cycle. For instance, it's a tough cycle to break. For instance, right now, I believe it is the most fantastic time to invest in a mining fund. And we're floating some trial balloons to start a new mining fund, because everything I see out there is super cheap, and on a risk-reward basis, stuff looks fantastic.
All commodities, pretty much?
Well, gold's a little bit more expensive recently, but it's still reasonably cheap. But if you look at, copper, you look at, there's some metallurgical coal deals I'm looking at, they're cheap. Uranium's cheap. I don't know of too many good nickel deals right now, but in general, things are looking quite inexpensive. And if people have an investment horizon of, say, a decade, or like we've been kind of in the downturn now for like 5 or 6 years or 7 years, maybe. Well, it's not going to last another 10 years, hopefully. So if you have a 10-year horizon, picking up these stocks at these levels, you're going to do very, very well longer term. So that's an example. But right now, if you looked at, I'm down this year in my fund, so one would think, well, Warren's dumb. I would never give him money because he's down this year. Well, all I know is I see all my mining stocks, fundamentals are fantastic. They're finding more ounces of gold. They're finding more pounds of copper. They're finding more uranium. Everything's going very, very well, yet the stock price just keep dropping. And for one example too here, we're looking at, let's say, SolGold. And I don't own SolGold. I own it through Cornerstone, which owns a minority stake in the project. the property has an over 50-year mine life on it. And why is the stock weak in the last little while? Well, in part because the price of copper has gone down. Well, the price of copper has gone down in the last 6 months. What's that got to do with the next 50 years as the world makes a transition into copper, into electrification of, can you imagine how much copper we're going to need as everybody has an electric car? Not only the extra copper used in the electric car, in the motors, but also to run all the electric cables, so everybody has a big charger in their garage. Well, that's a lot of copper, and if the whole world does it, copper is going to do very well, and we're not finding a ton of copper right now, so exciting times for copper.
Yeah, well, I just have one more question, mainly about Beaver Creek. Where does this rank for you kind of on the circuit of conferences out there? And, do you have any examples of maybe some things that make Beaver Creek special?
Yeah, Beaver Creek is one of my favorites. The other one I really, really like is the BMO conference that happens every year in just before, late February, just before the PDAC. So that's really good because BMO does a great job of getting rid of a lot of the trashy companies, and they're basically, the companies you go and see there, they're all real people, high quality companies. Whereas if you go sometimes to, let's say, the prospectors and developers, the PDAC, sometimes you'll see a lot of scammers there because there's not that control. Here at Beaver Creek, I quite like Beaver Creek. And you catch the buzz of all the latest guys doing some of the latest work, and there's some interesting names here of companies that are doing some great things, and so at least it gets it on my radar screen. So when it does happen, if I hear of a good drill hole drilled by somebody, I'll say, oh yeah, I met the guy in Beaver Creek, I remember where he is, I know the property a little bit. So it gives me a bit of a head start, whereas sometimes if you hear of a big discovery and you have not done a little bit of legwork, or certainly met management and understood who they are and where they're from, what experience they have, and where they live, and stuff like that, it's a little bit slower to get up to speed on things. Like for instance, when Cantex hit, well, I've known Chuck Fipke for over 20 years, right? And I've already lost money with him, so I know him quite well, right? So, but fortunately, I've made back that money in some.
Anything you're shorting right now, Warren? No, nothing.
It's tough to short at the bottom of the cycle. Actually, there's one, I just don't want to get into it. I didn't think about one. I'm not short it, but I wouldn't touch it with a 10-foot pole. It's just an overhyped name. Flavor of the day. Yeah, there's a couple overhyped names. Just guys are promoting the heck out of the name, and when you roll up your sleeves, and in my case, I've been involved in that particular mining camp before, and I know what's going to work and what's not going to work, and I know that I'm pretty sure it's not going to work for them. And then there's another one. Oh, jeez. Like the PEA is fantasy PEA. Yeah, I think PEA they should almost change the designation to FEA, fantasy economic assessment. Like this one PEA I've seen, my God, it is completely and totally ridiculous. And for people who say that, following BRIEX, the whole, PEAs are really protecting investors, not a chance. This PEA, it's complete and total utter fantasy, and the mine will never be built. It'll never be mined, and retail investors to this day will fight with me tooth and nail that this is going to be a tremendous project, and there's not a chance it'll ever get built. So. Yeah.
You've said in a previous interview that you don't always back superstars that have been successful multiple times because maybe they get a little fat and the pleasures of riches, maybe they don't have the motivation.
Yeah.
But if someone's been successful a couple times, they've been able to assemble maybe a better technical team, a better financial team, they have better financial backing than they did previously, and whereas they may not be motivated of making their first or their few first millions, but you can sense that maybe they're in it for ego, and they want to build up their reputation for history's sake. Would you potentially back that person if you sense something, just the ego drive, maybe if it's not the money drive?
If I look at it mathematically here, okay, let's say the odds of finding a deposit, a good deposit, might be what, 1 in 1,000? let's say with a good person, it would be 1 in 100, let's say. Let's say 1 in 100, that's being charitable. Well, if the odds, let's say, of Chuck Fipke finding a caddy was 1 in 100, if you backed him on the next deal, that'd be 1 in 100 times 1 in 100, which would be 1 in 10,000 are your odds of him doing back-to-back discoveries. Well, I was dumb enough. I backed him on the next one. I lost $2 million, right? You get my drift, right? So the world in mining is littered with, I don't want to name the names. Some of them are my friends, but the reason I could say Chuck's name here is Chuck's on to, I think, another massive discovery, but it's been decades since his last one. So what I'm saying, what I mean by that is to have a back-to-back good discoveries, it's so tough to do. It really is tough to do. And if you work at the odds out of 1 in 100, 1 in 100, or even 1 in 1,000, 1 in 1,000, if you multiply the two together, like if it's 1 in 1,000 for the first, 1 in 1,000 for the second, that's 1 in a million that you get 2 in a row, right? So the odds of having back-to-back discoveries are very, very tough. So what generally happens is and Chuck is a good example, you'll make a discovery, and he's one of the most determined mine finders I know, but then you'll fail for a couple decades. And you'll lose money in Nevada, you'll lose money in Yemen, you'll lose money in Northern Ontario, you lose, boom, 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 and then eventually, boom, it hits you 20 years later. And there's examples of that where I've learned my lesson. I've backed people who are just coming off a hot discovery, and it's tough to make 2 back-to-back discoveries. It's tough to make 1 discovery. So I think what happens sometimes is after a big discovery, people are feeling really, really good, and it's really good, especially about that guy who just found it. And they're willing, I'll just throw money for sure back on him. I really like that feeling. He's a good guy. He's a hardworking guy. We made a ton of money with him. And then the next thing you know, he flops, and you lose all that money. So if you've rolled all the profits from the first one and the second one, and you get a 0. So that's really what I'm getting at a little bit there. It's tough to find a mine, and to find 2 back-to-back, the odds are very, very low.
Some of these groups form, and then they kind of control, let's say, 3 to 8 different exploration companies, and they pool assets, the CFO, and they do it to lower G&A. What are your perspectives here? Do you think there's wisdom in this?
Myself, personally, I stay away from that generally because, there's one group who's very well known. They've got maybe 20 or 30 companies, and they're stripping off fees off every single one. And there's a flavor a day. Oh, lithium's the hottest name. Well, they'll create a lithium company. Cobalt's the name of the game. Well, let's create a cobalt company. And next thing you know, they've got flavor of the day lithium, flavor of the day cobalt. They load up with tons of penny paper, and they're punting it out through their offshore accounts or whatever else they're using, so you don't have to report. And this goes on. Next thing you know, they've got a stable of 20 or 30 flavor of the day companies, and then when lithium goes out of favor, that collapses and investors lose all their money. Then when cobalt goes out of favor, that one collapses. And then when vanadium goes out of favor, that one collapses. And then when graphite goes out of favor, that one collapses. And then when I'm not saying heavy metals, but remember the metals, all the metals out of China, the
Rare earths.
The rare earths. That was a flavor of the day. Like, we're talking, you go into some of these groups, and they've got they've got flavor of the day companies for the last decade, right? And guess what? You are charging them fees every year, melting down that treasury. For instance, I'll give you an example. I remember after the BRIACs wiped out the entire mining industry, I'd have idiots come up to me and say, Warren, you got to invest in this company. They got $1 million in cash, and it's trading at $300,000 market cap. Look at the value there. You're paying for 1/3 of the assets. I said, what do you think $1 million in the hands of a mining stock promoter is worth? It is worth 0, because when the mining cycle turns, that mining stock promoter will immediately cease all operations in the field, and he'll sit there in his office for as long as he could possibly sit in his office and drain that treasury, because he knows he can't get a job in the mining sector because it's out of favor, and he'll be milking that treasury every which way, and he'll be given, he's got a friend who's out of a job. Well, he'll kick him a $40,000 management contract, and next thing you know, that $1 million is gone. So never fall for that.
As we conclude here, the Q4, what advice would you like to leave to the resource investors listening to us?
Now is not the dumbest time to buy good quality mining assets. You know, a lot of them have been beat down pretty hard, and if you look a little bit deeper behind the share price, you'll notice the fundamentals have actually improved over the time. And if you have the patience to do the work and find these good quality names and hold them into the next cycle, you're going to do fine.
Excellent. Well, Warren, thank you for your time today, and Nick, thank you also.
Yeah,
Thank
thanks,
you,
Warren.
Nick. Thank you, Bill. Cheers.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.